It's time to get the flow down on bond funds. Bond fund outflows continue. We noted last week notable outflows from the iShares 20-plus year Treasury bond exchange, that's TLT, 6% of assets in a week a couple weeks ago. Other bond funds seeing outflows as well. Bloomberg has noted BlackRock's junk bond fund seen outflows in 13 of the past 14 weeks. Can this continue, Dan? I mean, we've been waiting for years for bond outflows to actually show consistency. It hasn't, not in ages. Is this the start of something?
We don't think so. I mean, so what we're also missing is that we have more money in bond ETFs going in this year than in equity ETFs. It will be the first time in 10 years we've got more than 50% of the flows going into bond ETFs, just 20% of the overall pie. We think that you've got tactical investors that are playing the rate market, but you also have core and more target maturity-oriented products like the Bullet Share Suite that are continually seeing inflows this year.
Well, here's the man who runs the Bullet Shares. Are you seeing, is this correct? Are you seeing inflows into this is a laddered portfolio, essentially?
Well, effectively, these are final maturities. So actually, you put your money in at maturity, you will get your cash back. So it gives you the chance to build laddered portfolios, Bob, as you mentioned, which is crucial. And so most of these investors are long-term buy and hold investors who want to be able to have the different cash flows maturing, as you said, in the laddered. So our high yield, for example, which you mentioned, has seen high yield broadly in ETFs, big outflows. We've continued to see inflows into these asset allocators. And more recently, we launched our new municipal bond, Bullet Shares. Again, inflows coming in there, historically a less liquid asset class, and tried to bring more tools to investors around
so
that.
with laddering bond ETFs, you're buying specific classes of ETFs that mature at different periods,
exactly
so that you're constantly rolling over to the next maturity.
If you bought, and many have obviously bought individual bonds, it's getting the benefit of buying individual bonds, but having a diversified basket of ETFs.
And outflows, just back to the subject of outflows, he thinks not. We're still seeing inflows, but could that reverse?
Well, we've had a change in narrative from the Fed in the last 12 months. They've gone 180, where lower interest rates all of a sudden gave investors permission to go out on the maturity levels and also lower quality. But now it's uncertain as far as what's going to go forward. Kind of what Dan's talking about here, it's more decisive as far as getting back to laddered bond portfolios in a diversified way, because again, if you don't have indication of where the Fed's going to be going in the future, that's more specific.